Hi guys, in today's video, I'll be sharing how to use the Singapore Webull app to trade options. And if you guys have not signed up with Webull yet, I have placed my affiliate link down in the comment section together with Webull's current promotion. Each sign up will help support this channel at no cost to you, so do check it out if you have not opened a Webull account yet. But no obligations, yeah? By the way, just a disclaimer, this is not financial advice. Option trading can be extremely risky, so please paper trade first if you are new to options. I'll be using a paper trading account for this tutorial, and with that in mind, let's take out our phone and let's look at some option chains now, shall we? So other than the starting page, you'll see stocks, options, orders and performance. Since this tutorial is on options trading, therefore we will be clicking the options tab. So now we will need to type in the stock ticker symbol. Usually for options, you want to trade on the stock with a high trading volume. And let's choose Tesla for this example. So the stock ticker symbol will be TSLA, and let's click on it. So this is what is known as an option chain. It can look pretty intimidating at the start, so let's go through each component slowly. What you see on the left will be the option's expiration date. Every option contract has an expiration date, and the number in the middle just represents the days till the option expires. Typically, if you were to buy an option contract, you would want to buy a contract with as long of an expiration date as possible. This is because a longer expiration date will give you more time to be right. But of course, there is no right or wrong when it comes to option trading, since there are people who just whack their full account balance into short-term contracts, and if they are right, then you'll see them go howlian on Wall Street bets lah. Oh yeah, and sometimes you'll see a W in the expiration date, and those refers to the weekly options. And the 100 that you see just means that each option contract controls 100 shares. So for this example, let's choose the option that expires on the 19th of January 2024. So when you open the chain up, you'll notice all these rows suddenly coming up, and let's go through each of them slowly. The first thing that we want to pay attention to is the option strike price, and that will be this line over here. So this line that you see here refers to the current stock price of the underlying stock, which in our example refers to Tesla's current stock price. And what I would recommend doing would be to go to the option list setting, which is these two lines here, and click on it. From there, you can see sort by strike price ascending. I would prefer to change it to descending. After doing that, let's go back to the option chain, and we can see that options with a strike that is lower than the current price of Tesla will now be placed at the bottom, and those with a strike above the current price of Tesla will be placed above. So you'll notice that Webull has placed the calls to the left of the screen, and you will see that the puts are to the right of the screen. If you want to just see one side, which is either the calls or the put section, then you will just click this button here and change it to the side of your choice. For me, I like to see both, so I'm leaving that on. So when buying an option, you will always look at the asking price of the option. The bid price is left to people who want to sell their options. And since this tutorial is more on buying options, let's focus on the asking price. In the future, I'll also create another tutorial on selling options via the Webull app, and I'll link in above. Anyway, let's pause here and talk a little bit more about calls and puts for a while, shall we? So, buying a call option just gives us the right but not the obligation to buy 100 of the underlying stock, which in our example is Tesla, at a stipulated strike price on or before the option's expiration date. Buying a put option, on the other hand, just gives us the right but not the obligation to sell 100 of the underlying stock, which in this example is Tesla, at a stipulated strike price on or before the option's expiration date. And people usually buy calls when they are bullish on the stock, and they will buy puts when they are bearish on the stock. But there are many users of buying options which are really out of the scope of this video. By the way, is this video helping you in any way? Because if it is, could I encourage you to hit the like button, as this tells YouTube that hey, this video is really useful, and YouTube will then push it to more like-minded people like yourself. Let's pause this tutorial again and talk a little bit about the options Greeks now, shall we? Even though this video is more like how to use the Webull app, I think it's also useful to understand how Delta and Theta works, especially if you are serious in learning about option trading. So Delta is basically the amount an option price is expected to move based on a $1 change in the underlying stock price. So let's take a look at this strike over here, and let's assume Tesla's price were to go up by $1. The price of its calls will in theory go up by 56 cents and its puts will drop by 44 cents. Got it? Theta, on the other hand, represents the rate of decline in the value of the price of the option due to the passage of time. And so the thing about options that kills most traders is time decay. This is because unlike buying stocks, options lose their value over time, and this is known as time decay or theta decay. So every time we purchase an option, we are always fighting time decay until expiration day, where only the intrinsic value of the option remains. Let's take a look at the same strike now, shall we? So based on this information, this call contract will lose 12 cents of its value and this put contract will lose 13 cents of its value. Another thing to note will be this blue column over here, and this represents the contracts that are in the money. Generally speaking, in the money contracts tend to be safer than out of the money contracts, and the percentage that you see here just shows the probability of this trade being in the money at the option's expiration date. So let's assume that we are bullish on Tesla. We can buy a call with a strike of $263.33, and we do that by clicking the Ask over here, and we will then be brought to this page where we have a basic candlestick chart of Tesla. You can add frequently used indicators by clicking this button over here as well. If you'd like to see a summary of your trade, then you can click this tab over here where you can reference the break-even point of the trade. So this means that Tesla must be above this number at option expiration for you to profit from that option. And you will also see the max loss as well as the profit potential, which in this case is unlimited when you buy a call option. Once you're happy, you can then just choose your order type. So if you're like me, a custom spider, and you want it filled up ASAP, then you can just choose market law. This will ensure that Webull buys the contract at market price. But if you want to really control the price, then what I would suggest is you click limit, and Webull will then buy the contract at your limit price or lower. Next, you just choose the amount of contracts that you want to buy. So take note, $28.70 does not mean that you just need to fork out $28.70 for one option contract. As one option contract controls 100 shares, hence you need to multiply that number with 100, and that will be the cost of one option contract. The next thing to note is time in force. A day order will mean that this order will be cancelled after the market closes on the day, while good till cancel will keep this order up till we either cancel it or 90 natural days are up. And once you are happy, just click submit. So I hope this tutorial gave you a better sense as to how to trade options via the Webull app. And if you have not set up a Webull account yet and would like to set one up, then do consider setting it up via my affiliate link down at the pinned comment section. I'll be posting Webull's current promotions there as well for your consideration. Anyway, my name is Darren. I enjoy posting content relating to options and personal finance. So if my videos resonates with you, then do consider subscribing to my channel. And if you would like to know more about options, then do check this video over here. See you!